My father hit reset on his career at 50, so started from zero, took a big risk, moved our family.
A lot of people think that $100,000 in their bank account is exactly that $100,000.
We're not just focused on growth, we're focused on bottom line, focused on good margins, good quality service, and happy clients. People get shocked. Oh, I owe 50 grand, plus I owe another 25. You're thinking like really small.
Like, what do you teach businesses to, like, how do they prepare for that?
At 24 years old, I was let go of my corporate job. By 34, I was financially free with an 8-figure net worth. This podcast is all about taking adversities and turning them into financial success stories. I'm gonna ask for one small favor, and that's for you to click subscribe. Now let's get to the journey.
Larry, welcome.
Thank you.
Oh, so we just talked about tech for the last half an hour, and I'm like, we might as well record and talk in public about it. I'm gonna give you a huge kudos because I'm gonna go on record and say you're probably one of the best accountants in Ottawa that I know of.
Thanks. I know a lot more that are better, but I appreciate that.
You're super modest, but I've known you for a while, and how you can help a client out and really understand their journey and take all your knowledge from tax, accounting, everything that you've known for the past X amount of years and really deliver a solution for the client. Like, tell me how you got to this place. Like, have you been an accountant for 15 years, 10 years? Like, tell me a little bit about your journey.
Yeah, so initially I wasn't thinking I was going to be an accountant. I went to school for science. I studied genetics. And, when I finished school, I thought, well, maybe I don't know if I want to be a physician or a dentist at this time. I didn't want to go into research because master's and PhD was sort of the next step after an undergrad. And my dad, who was a CPA or CA in audit, said, well, seeing as you're not sure yet, why don't you take a couple accounting courses and see where it goes? And I did, and I liked it. Found applied for a job at one of the large firms, PwC, and got the job because they were trying to hire outside of accounting to get a rounded knowledge for their client, for their staff at the time. And I said, well, seeing as I'm on this path, I'll just continue down the path, and then one thing led to another. I ended up moving to Ottawa and joining a smaller firm and realizing that was a really nice match for my skills because rather than helping like a big public company, I really found that as an accountant, your language is acts of service, right?
Right.
And I felt like dealing with the small business owners and advising them and listening to them and asking them lots of questions, which is why this is a weird situation where you're asking me questions was something I really enjoyed, and finding value or finding a way to provide value was something that I was always thinking about. So,
And where are you originally from? Like, you moved to Ottawa?
we moved to Ottawa. So I actually was born in South Africa.
Oh, nice.
Moved to Canada. We immigrated when I was 11. My father hit reset on his career at 50, so started from zero, took a big risk, moved our family, and so then when I met my wife in 2008, she's from Ottawa, so she was moving back here for some school, and I said, well, this is the one. So
You had no choice.
there was no choice in my mind. I'm coming, and then I applied for some jobs here and got a job at a small firm, and I've been at McIntyre and Associates for 15 years now.
Wow.
Yeah.
So it's been 15 years.
Yeah.
Do you ever go visit South Africa? Do you have any family there?
We still have some family, have cousins. A lot of people left, went to Australia,
Okay.
went to London, UK. Still have family there. Last time I visited South Africa was 2 years ago.
Nice.
I did this big mountain bike race,
Oh, cool.
which was really fun.
Did you bring your kids?
Not that
Yeah.
time. We have a plan to bring them, but they're still a little young.
Okay.
They were at the time 6 and 8, so the travel was a bit too hard. But the plan is to bring them. Yeah.
Nice.
Yeah.
Well, so you came back to Ottawa. Your dad is obviously an entrepreneur, or like he just took a reset, started his, did he have to go to school and like redo everything?
Yeah, essentially, so he got a job at an accounting firm, a large firm, and was in audit. So I'm in tax, so it's a bit different,
Right.
but he was in audit. Um, he took that big risk, and yeah, so I mean, I think just I wouldn't say necessarily he was an entrepreneur where he started his own business, but he was definitely took a big risk
Right.
in moving and starting from scratch. And I think he had to set aside that entrepreneurial spirit to provide for us a
Right.
guaranteed income.
Right.
Yeah.
And 15 years ago, when you went to McIntyre, how big was McIntyre at that stage?
There was about 9 people. So
Wow.
we were pretty small. And I had come from PwC where there were thousands of people.
Right.
So it was a culture change for
Completely
sure.
different environment.
Yeah.
And did that resonate with you? That agile, probably get things done, wear multiple hats.
Yeah, I liked that more. So I think when I was at the bigger firm, if someone asked you a question you didn't know, you would just find an expert in that thing, which is great because you have resources everywhere. But in a smaller firm, you are the resource. So you either have to try figure it out or have to find someone external to your organization. So it was nice because if you had an idea, there wasn't about 100 layers of people to approve an idea. It was like,
Right.
whoa, that was a good idea. Why don't you run with it?
Right.
So then you can bring in different spreadsheets, templates, processes. You can look at change things. So it's a great opportunity to make change when you're smaller.
And 15 years later, now how big is McIntyre and what's your role there currently?
So I'm a partner now. So I've been a partner for 10 years there. We're about just over 40 people full time, and then some part time staff as well. And so we've grown considerably. But our culture is very much controlled growth. We want to make sure we continue to service our clients the right way. We want to make sure that when we're growing, we're not just focused on growth, we're focused on bottom line, not just top line.
Mm.
So we continue to have, focus on good margins, good quality service, and happy clients. And what's awesome is we have almost no churn, meaning we don't really lose clients out the back. We lose them to old age, essentially. Yeah. Or
Uh,
sales, or they sell their business. Yeah.
and why is fundamentals in business so important? Because I know a lot of people chase revenue or chase growth. Me being one of them. I mean, when I started my business, I was chasing growth. I was chasing the new tech. I was chasing all those things. And when you're chasing those things, you might not focus on net income. You might not focus on the fundamentals of business. Why a controlled approach rather than, you see so many opportunities out there? There's not that many accountants, qualified accountants, let's just say, and the younger generation's not moving into accounting, so there's a complete shortage. Um, you can double in if you wanted to. Why control growth?
I think when you're a young company and you're starting a company, you're definitely chasing revenues because there's a critical mass of where you need to get to before it makes sense. When you're a more,
What is that critical mass? Do you think it obviously depends on the industry?
I think it depends on the industry. It also depends on the ambitions of the owners
Hmm.
and the partnership. So when you're trying to grow because you have large ambition and large growth goals, you need to focus on top line. You still need operators internally helping you focus on bottom line because if there's no cash flow to reinvest in growth, it's not going to go anywhere.
Right.
When you feel like you've achieved or gotten close to what you feel is your capacity as an organization or as the ownership's ambition and goals, then your company matures to that next phase, which is standardizing processes, internal processes, making sure the quality of the work continues, that you've built something so big, you don't want to take the risk on of taking on more and then, creating a liability behind the scenes. So a more mature, when the company matures to that next phase, maybe now they're going to focus more on cost, being cost conscious, mitigating risk and just more maintaining, and then growing more on a conservative basis. I mean, we're accountants and we're conservative. So I think as the company matured, the goal was, just to focus on that more.
And if someone's not comfortable with accounting and tax and planning the way, let's just say both of I are, like I was fortunate where I knew what my tax bill would be at the end of the year. So I would grow, but I would always have the cash reserve to pay the taxes. A lot of people think that $100,000 in their bank account is exactly that $100,000 and don't consider the installment payments, don't consider the liabilities that go with it. Like, what do you teach businesses to, like, how do they prepare for that? Like, would you recommend allocating 20% to a savings account? Like, how can they grow but also have enough cash to sustain their business too?
Yeah, that's a great question. I have a lot of people that come to us and they're just setting up a business. They're self-employed or they've just incorporated. And I talk to them a lot about budgeting and planning upfront.
Nice.
So maybe they've just finished school. Maybe they, were employees and they've started their own business and they're used to just getting whatever the money came into their bank account
Right.
was theirs, and that was sort of it. So we really spend a lot of energy saying, okay, what do we think the revenues are going to be?
Right.
Does your business have HST or not? What are your tax credits? What tax do we think you're going to owe at the end of the year? And what's the budget of the things you need to live off of?
Nice.
And then we, if they're self-employed and they don't have a corporation, we normally set up a separate bank account.
Mm.
And then I say, great, the money goes in to the bank account, you pay your expenses, you transfer based on your expected revenue X,
Mm.
and you leave behind Y.
Yeah.
And the money that's in your personal account that you've transferred over based on our budget, that's yours.
Yeah.
The money that stays behind is not yours, because in the first year, it's kind of cruel.
Yeah.
You have to pay your HST payment, you have to pay your income tax bill, plus you have to start paying installments for the next year.
Right.
And it all happens all at once. So people get shock. Oh, I owe 50 grand, plus I owe another 25, plus I have to pay another 13. And then suddenly this bank balance drops to almost zero, or they've moved the money and used it. And now they're using next year's money to pay last year's taxes. And you have this chasing tail situation where you feel like your tax rate is 80, 90% because nobody told you ahead of time what to expect and how to prepare for it.
And let's talk about those three different taxes.
Yeah.
Sales tax. What is a sales tax?
So every time you bill a customer, if it's a taxable supply, which is pretty much everything, you have to charge sales tax. In Ontario, it's 13%. In Alberta, it's 5%. But you have to add that to it. So it's essentially that you're collecting money on behalf of the government. And then you're holding it in a trust account or in your account, which is in trust for the government. And then if you're a small provider, so less than 450,000, you only have to file that once a year. So you get to hold that money, but then at the end of the year, you have to prepare a sales tax return and you have to give the money to the government.
So that 13, if you charge a client $100, $13 is in trust or stays in your bank account. If you have no expenses, that $13 needs to be paid to the government.
Correct.
So that's one tax.
Yes.
Tell me about the income tax now.
So you get your $100, 13 you have to set aside because it's not yours, but it's still in your account. So sometimes that gets confusing. You then have expenses. And then after you paid your business expenses, you have a total. So let's say you have $100 come in, $30 is your business expenses. Now you have $70 left over. That $70 is your income, and you have to pay income tax on that. That tax also has to be paid to the government. In the first year, it's once. You just pay it on April 30th. The second year, you have to start paying installments.
Right. So the first year, you just have to pay whatever that tax is. So the first year is sales tax and income tax.
Yep.
The second year, based on whatever your sales was the previous year,
Yep.
what's an installment then?
So that's typically that total number divided by 4. And you have to remit that quarterly to the CRA. So then in theory, the next year in April, if your income was exactly the same as the year before, you wouldn't owe more tax because you paid your tax upfront.
So if you owe $10 or $12, you would pay $12 or $4 every quarter for the following year.
$3 every quarter.
$3.
But
Yeah. There you go. See?
Yeah.
So $3 every quarter for the following year.
Yes.
plus the income tax plus the sales tax,
Correct.
right?
Yes.
And this is why I'm breaking this down is because of cash,
Yes.
right?
Yes.
This is so now you're prepaying for your taxes, you're taking out cash to pay the government. You're allocating money to pay your income tax and your sales tax. And I've seen it time and time after again, or time and time, where business owners take that money for growth rather than plan for that.
Right.
Because installment tax right now is like if you don't pay installments, what does the government charge you?
It's I mean, it was 10% last year. It's now, I think, 8% with the interest rate
Right.
reductions. Yeah.
So
It's expensive money.
it's expensive money
Yeah.
to not plan for.
Correct. It's also not deductible interest.
Right.
So if I go to the bank, I can at least write off that interest if I'm investing in the business. If the government is the bank, I can't write off the interest. So it's almost like double.
Right.
Yeah.
Okay, so in regards to, so you set up a meeting with the client
Yeah.
and you talk about anything to foresee for the client to be prepared for, essentially.
Yeah.
Then what? Do you meet with them every quarter, every year? Do you like what's the relationship throughout the year then?
Yeah. So the way I like to work with my clients is I do like to build up a relationship. I don't. I say I don't nickel and dime for phone calls. I rather you ask me the question that we can deal with the problem, or come up with a solution, rather than you not ask me. We have to figure it out later, and I can't help you sometimes after the fact. So generally, the first couple years of a new client, there's training, there's teaching. I taught at a college, I taught at a university, I taught courses. So I recognize that part of my job for these small business owners that just get started is to teach them what they don't learn in school
Right.
about what their expectations are and their planning.
Love it. I love it because I think there's such a gap between the practicality and theory of running a business that
Yeah.
they get with you.
Yeah. So and that's, I think, where we build value and trust is my clients don't come to me for a once a year compliance.
Hmm.
My clients will come to me to buy a house. They'll come to me when they're going to have a kid and to plan how long the parental leave will be. They come to me when they want to build a building or start a business or expand. They come to me for all those things as well, which is the fun stuff.
Right.
Yeah.
So now that's the basic kind of business starting out. You guys also help people buy buildings. Like now your firm now handles a wide range of services for
Yeah.
starting at five. Like what's your minimum and like you have client like just to give a range of the type of clients you guys work with.
Yeah. So we work with clients that are just getting started. So, normally, someone who's going to incorporate, just because personal returns are fairly straightforward and maybe our fee range where we is more efficient, that if it's just a simple return, we don't normally get involved. But anywhere from starting a small business corporation, just getting started, all the way to I've just sold my business for X 100 million and I need help structuring my estate planning and trusts and holdcos and family planning and reviewing wills and dealing with my investment advisor to optimize my tax structure. I mean, and everything in between. Yeah.
And I think one thing people don't realize, everyone talks about Canada being taxed to death at the end of the day. But the small business corporate rate is 12%.
Correct.
That's a huge advantage for a lot of Canadians. And I don't think a lot of people are even aware how big of an advantage that is. Like, I don't know what it is across other countries, but is it one of the lowest corporate tax rates for small businesses? Do you know?
Yeah, it's definitely very, very, very good.
Yeah.
I mean, we're super, super lucky.
You're right. And I think so you obviously educate the clients to incorporate sooner than later so that there's more advantages while running a business through a corporation.
Yeah, so definitely. Part of that initial planning
Yeah.
is let's look at your cash flow. What's your business revenue coming in? What are your expenses? We will look at what are your goals for your business? Do you have to lease a location? Do you have to buy equipment? Do you have to take out a bank debt? Or are you just selling your services?
Right.
So it depends on the business. Maybe incorporating sooner makes sense because of risk.
Right.
Sometimes, if you're, say, a physician, um, you have debt coming out of school. You want to buy a house. You have all, RSP and TFSAs and FHSAs, all these tax-free savings account, first home savings accounts, RSPs for the home buyer plan. I mean, there's so many incentives out there that don't require a corporation. So if you're just saying, "Hey, I'm just going to earn this income, but I want to buy a house, I have personal financial goals I need to
Right.
deal with first," maybe incorporating doesn't make sense
Right.
at that point.
That's a good point.
So it's not always, yes, we should do it when. It's very custom.
Yeah.
So my job is to talk to the clients and look at their next 3 to 5 year plan.
Yeah.
What do they want to do? And based on what they want to do, build out a custom solution or an overarching plan that we just update every year.
Nice.
So some of my clients don't incorporate for 5 years because they have all these personal goals and they're a physician and this is their income. Other clients want to start a business, lease out a location, and build goodwill. We incorporate right away because of risk mitigation and the tax incentives because they want to reinvest that profit in the
Right.
growth of their business. So we come out with a very custom solution based on that client.
Do you always have the first meeting or this planning session with the client?
Yeah,
Is it is it always you or a
it's
partner or like because I'm just thinking to myself, there's so much out there that it took me 10 years selling a business because there's the tax side, but then there's also the TFSA, the financial, like the investing side,
Mhm,
which correlates with the tax side as well,
that's right.
depending on your plan and your situation, and then you have kids and there's another advantage with,
Yeah.
the education fund that the government has. So like, I'm not sure someone with a lot of experience in business, like you have to have business experience, you have to have tax experience, and you have to have investment experience to really plan out the next 3 to 5 years for the client.
Yeah, exactly. I think there's also insurance component in there as well.
Right.
So yeah, when you come out of school and you're just getting started, you maybe don't have the resources to go to the right investment advisor that deals with the high value or the clients with more resources. There's lots of insurance options out there, but you need someone who's independent. Now, I'm not an investment advisor and I don't sell insurance. I don't do any of that. I don't do wills. We don't even do the legal work to incorporate. I see myself as a 30-year marriage with a client,
Yeah.
an independent advisor that you can come to ask these questions when it's like, oh, I need life insurance. I've been told about X, Y, and Z. Well, we just sit down and we cost benefit analyze what makes sense.
Mm,
So that's how I position myself for my clients. So yes, at that onboarding, the exploratory call, there's usually a lot of value that we're providing that we're not really charging for, but it's more of a get to know you, see if we're the right fit
right.
because it's great for both of us. And
Yeah.
either I'm on that call, I have some great
Mm,
people working with me that hopefully will be partners one day,
yeah.
that are part of that conversation as well because they have so much to give and so much value as well.
Yeah, because it's not just a list of questions and asking them. It's
Yeah.
like you got to really understand the now and the future and correlate everything to that person. And when you talk about referrals, do you have a referral relationships with a lawyer and insurance and you bring them on the call?
That usually comes later.
You're about
Yeah,
later.
so I'll have an exploratory call, and when it makes sense we talk about, and sometimes my job is not necessarily to provide the solution but to introduce the concept of the solution.
Mm,
So sometimes if someone's incorporated and they're asking me about compensation plans, do I do salary, do I do dividend? Well, I'm not going to build this complex custom plan if you have no investment assets yet. So I introduce the concept of what are the pros and cons, what are the hybrid strategies that are out there, and when it will come.
mm.
So some of it is, oh yes, we need to look at insurance, or we need to look at moving money to invest, but we just introducing the concept of incorporating and when it's useful,
Mm.
but maybe we're not actually going to do it yet.
And it's the education part that
It's
you're,
just
yeah,
education.
right,
It takes time. Like I have clients that are getting approaching retirement, and we're just introducing the concept of what does a freeze and a
right.
and a trust look like,
Mm.
and how do they work.
Mm.
We're not doing it yet because it takes time. That's how, which family members are going to be in the trust. How much am I, am I going to freeze it? Like, what am I going to do? You know?
Love it.
Yeah.
So, accountant for 15 years, done out of school, a lot of clients, built a business. Clients come to you. You have this whole playbook of the customer journey because you've seen probably thousands of clients in the last 15 years. And now you're embarking on a new journey.
That's right. Yeah. Yeah. It wasn't enough. Yeah.
I want to know like the emotion around it. Like, so tell us a little bit about the new journey, the tech startup, and then let's dive into that and the mindset around it.
Yeah. So I think if we go back to where the idea came from is through this customer journey at the firm,
Mm.
we identified friction points with us and our clients. I mean, we care about low churn or not losing clients. We care about clients being not sticky, is kind of more the tech term, but we want a relationship with our clients to continue. Um, we felt that there was friction at the end of the engagement. We would do all our work, we would do all this planning, the cash flow, the budget. We would prepare everything, and we'd summarize everything for our clients, and we give them a schedule of what they needed to do. And because they're busy, they're building a business, they're flying around, they're going to clinic, whatever they're doing, they're busy. Sometimes they would forget because it's hard to remember something, or it would be on their plate, but it would be a mental load, which is just a distraction from getting the job done. And if they would miss these payments, or they would be stuck with interest or penalties, we'd have to work to fix it. And it was always our fault because we maybe didn't make it as important on their mind. Um, my wife is a physician. She has a professional corporation. She was one of those clients that I would send a schedule, and occasionally I get an elbow in the evening saying, "Hey, did I miss this payment?" So
And just to reiterate, a schedule is what?
like a schedule of all the tax
Okay.
installments that you need to make.
So anything that you owe the government.
Correct.
Okay.
Whereas when we talked about it earlier, the personal return, there's just the 4 quarterly and the HST. When you have a corporation, it could be monthly payroll, monthly installments, monthly HST installments, or quarterly. Payroll's on the 15th of the month. Corporate is the end of the month. You got personal installments. So there's way more options or way more things you need to remember and track. There's a lot of balls in the air. And if you have multiple corporations, as some do, you got to do that multiple times. So, my wife would forget from time to time, and we'd adjust the schedule so she wouldn't have to pay interest.
How
And
mad would you get if
yeah,
if the interest
yeah,
if the payment didn't happen for whatever
yeah,
reason, the interest gets hit and it's not deductible? Like that must have been like
yeah, the numbers go
yeah,
catch up pretty quick.
yeah,
Like it's a small number, it's
yeah,
this big number,
right,
like payroll, it's
right,
10% penalty.
right.
So if you have a $150,000 salary and you're paying $50,000 in installments and you miss one of them, it's a $500 penalty one day. Boom. So it's really important that you pay these things on time, right? So at some point, my wife's like, "It'd be great if you could just do this for me." And I was thinking, this is a problem for me. This is clearly a problem for my clients.
And the
Yeah.
reason why you couldn't do it for her because you might not have her corporate bank information,
Right.
right? Like it's not something that you can you'd have to go to the bank, you have to get access to it. You'd be an authority, you'd have to have authority on it,
Correct.
make payment. Like it's a process to get a corporate bank account so that you can pay it. So you're really relying on the owner to do that initiative while
Yeah.
they're so busy
Yes.
to pay the government, which it's like a puzzle to even pay them.
Right. Yes.
So yeah, I just want to preface
No,
that
for sure.
because
Yeah.
even with my wife's return, I'm like, oh my God, like we have to go to the bank. Like we have
Yes.
to make that,
Yes.
an issue because I just don't have access to it.
That's right. And sure, I could get access to my wife's
Right.
account. I'd
Right.
probably have access.
Right.
It wasn't about the n=1 solution. It
Right.
was like, well, is this a scalable practice?
Right.
Sure, I can help one person, but am I going to get authorization on 500 clients
Right.
on their personal and corporate accounts? No, that's not scalable.
Right.
So the thought process is this is clearly a problem. I know my clients are struggling with it. I know my wife is struggling with it. As a result, I'm struggling with it. I'm getting texts at night for clients trying to figure out how to pay. The amount of FaceTimes I would do when I was hanging out with my kids playing Monopoly to help people in the last day of the month make a payment or fix payments, or on the phone moving payments because it got put in the wrong client or the wrong year. So it was a headache. And what I realized is that as an accountant, we used to meet with our clients in person.
Mm,
We would go through the tax return and the financial
yeah.
statements. They would sign off in ink. They would then take out their checkbook and write the payments. And then we would courier them. And at some point, things became virtual, digital, remote, which has a lot of positives. But that touch point
Yeah.
fell off the map.
Mm,
So then it just became this invisible, here's a schedule. And I think at some point I just got fed up that we're supposed to be helping with this and we can't anymore because of regulatory reasons, anti-money laundering, FinTrack,
right.
all these things, or risk. I don't want to have access to my client's bank
Right.
account. I don't want an employee to feel the risk of having to do it.
And that's not your specialty too.
It's
Like
not a
you're
specialty.
building the journey out.
Yeah,
You want to spend your time on the strategy calls, not paying CRA.
correct. And also all that work would happen in the last day of every month.
Mm,
That's a lot of stress on a staff to have to sit there and code in 100 payments. Like it didn't make sense for our business, but it made sense that it was still part of a process. So basically, as a result, came up with the idea of Remitian. Remitian being a software tool that accountants can leverage to help their clients pay taxes. It's the last mile of the tax journey, which normally we wouldn't do. It's like Amazon dropping the parcel down the street in a snowstorm. Now it actually gets delivered to your door. It gets done. Um, and now that process is, when I meet with my clients, whether it's virtual or not, they're getting a digital package of their tax return,
mm,
and they're getting a notification that Remitian has all their scheduled payments logged in. They log in, we review them together, they approve them, and now the payments just get made. They get alerts and notifications and they know what's happening. But now there's no more stress about, do I have to pay it? Did I pay it? How do I do it? It was all done, and I have visibility, and my staff and my team have visibility. So the accountant can see that it got made.
mm.
You can see it was made on time. They get alerts if it's not made and there wasn't enough money, so that they can readjust the schedule or they can help if they need to. And as a result, I have less phone calls with clients about that and more of our phone calls about value add.
Mm.
We have less calls to CRA and less unproductive or unbillable time and less friction.
And have you applied it across your organization?
It's scaled within our organization. Yeah. Yeah.
And you started this when was the idea to concept to, okay, I'm going all in on it?
Yeah. So the original transaction, the first transaction was in like the first idea was just, how can we build a tool to help our clients? So
With McIntyre.
with McIntyre, we still had to set it up as a separate organization.
Right.
We still had to get FinTrack,
Right.
register, get all that process in place. But the first thought was pretty small.
Right.
Yeah, our thinking was just, how do we help our clients
Love it.
and save this? And my wife was the first customer.
Love
So
it.
it was the first tax payment.
Love
So it was
it.
like high risk situation. Um, I I had to sign like a personal guarantee
Mhm.
of like up to $1 million on my house, in case things went wrong. I was on the hook, right? So there was a lot of unreasonable risks that were taken early on. We did that first transaction. Um,
Now the is that like a banking?
yeah,
Oh,
bank,
okay.
yeah,
Okay. So
because it goes into a trusted bank
right.
platform, and then it has to get sent over
Gotcha.
because we're in the flow of funds, so we
Right.
have a lot of regulation,
Right.
SOC 2 compliance,
Right.
penetration testing, insurance, cyber. There's a lot. The more you look at it, you
Right.
realize.
It's
Yeah,
funny. Like,
yeah,
okay, the problem
yeah,
seems so obvious,
yes.
and then
The
you start
solution is
like,
hard.
right? Because you have money.
It's really hard because you're in the money and there's a lot of regulation. So you need to have a bank that sponsors you. There's a lot of work to do to build that trust, a lot of paperwork. Thankfully, accountants are good at paperwork. So it got done. Yeah, we did the first transaction. Then found the clients that were keen.
So what was your fight, or what was your wife's first reaction?
Oh, I mean, by month 2, she was like, "I don't have to think about this. This is fantastic."
Nice.
At first, she's like, "I'm not sure." And then it started working, and she was just like, I don't think she's thought about tax payments in, 4 years.
Wow.
Like it's not even a stress. Once a year, she gets the thing. She gets an email before the payment is due so that she knows the money needs to be there, but she has no stress over taxes anymore.
So the people that are in businesses see a problem. What do you recommend before we get into the 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 next client and the later on journey?
Yep.
You started small,
Mm-hmm.
but you now needed money to start even piloting.
Mm-hmm.
Like, do you at that point start talking to family and friends? Like, you know the technical stuff. You've never built a tech company. You don't know the all the compliance on all that. Is your first move now like try to find someone that's knows this and match my skills with your skills type of thing? Or like, what was
That's
your mindset?
that's inevitably what happened.
Okay.
I think there was a bit of time between that first transaction and when we got there because initially, this was the idea.
Hmm.
We had some transactions, we got some clients on it that were, tech clients or consultants or whatnot. Um, at that point, I wasn't necessarily sure that it was a business that was scalable.
Okay, so to even get to that point, were you just like on YouTube, like doing all the research or wherever to start building that first
Uh,
stage?
the first stage, we hired
Okay.
like a technology developer
Okay.
and worked with us on that.
Gotcha.
We did so it was a partner and myself, and we hired like a technology. All put money in
Okay.
a little bit to get it going. Built out the tool as we
Gotcha.
call it, a proof of concept version 0.01. Um,
And I'm assuming you're doing it very lean, like
very lean. Yeah,
you're
yeah,
cross-referencing, like you're watching your pennies because you don't know.
correct.
Right.
Yeah, it was very lean.
Yeah.
Because we're trying to we're not even sure we can do it.
Right. And this is your MVP.
Yes.
Right.
Yeah, exactly. Like our base product, proof of concept sort of thing. And we weren't even sure it was possible because we had to go talk to various banks. We had to figure out regulatory. We had to figure out the technology. We had to figure out a lot of work before we, determined that we can even do what we were asking to do. And as we explored further and further, we used probably our novel thinking um, to come up with a structure and a strategy and a process which we've patented
Hmm.
that is unique in the approach. Um, and uh, at that point, then we turned it on only after all that stuff was in place.
Hmm.
So we took risk before we even processed the first payment because you can't until you have approval.
Right.
Like all that stuff has to be in place. You can't just take someone's money, put it in your account, and send it off.
Right.
There's so many rules. So we had to do all that believing that it was just a risk or a chance because it was solving a problem that was big enough for us that we thought it was worth the effort.
Now, is the risk your time and the software development time and like all the payments for the regulatory?
Yes.
Okay.
Yeah.
So those are the three different
Yeah.
buckets of risk.
Yeah.
Okay.
At the beginning.
At the beginning.
Yeah. And then, we did some payments. We scaled it within our firm. And we didn't scale for free. You have to charge your customers because otherwise you don't know if it's real or not, right? So if people won't pay for it, maybe you've got a problem. So we were getting paid for it in the platform, which was really just covering costs and some more development to make it a little bit better. And the first version, I think back, it was, it was clunky. It was hard to navigate. I mean, the tool worked great. We're still using that tool, but so then we thought, oh, we got to get maybe some other firms. Oh, we got to get some other firms on the platform. It's a rookie mistake. Sorry.
No, it's all good.
We got to get some other firms on the platform. So we looked at some, just more to see if this is a problem for other firms. and we had Zen Books, which is based in Ottawa, and they're amazing. And the other one is in Toronto, from Crow Soberman. Again, they have like a bookkeeping practice, and they were also quite keen to test it with us.
So, and I love this approach because you were lean, you had a focus group of your wife and your wife to
Yeah,
test it. Lean, found did a lot of the work yourself, rolled up your sleeves, hired a software developer. Then you had an audience with McIntyre.
yeah,
You had relationships with McIntyre that you can ask direct feedback from the customer to see what they like and what they don't like before investing millions of dollars
correct.
or hundreds of thousands of
Yeah,
dollars. So now you're vetting it again. First vet with your wife, second vet, a more centralized community.
correct.
The next one is partnerships. Okay, now these guys like it. Now let's branch off to Zen Books,
Hmm.
who I have a relationship with. And now I'm not going to be asking the questions. They're going to be asking the questions. And I'm going to go directly through them to see what the feedback is.
Yes.
Right. So you're doing a multiple layer approach to then what happens next.
So in parallel with that, I would be having conversations with the now CEO, Salon Angel.
Hmm.
He was with his startup. Well, it's now much farther than a startup, but he was guiding the process as a friend, and had some touch points here and there. What should we do here? What do you think? And at some point, he was having the problem himself. We had done some of these steps. He was having the problem himself. He was talking to people in the firms in the US. He was talking to firms across Canada. He was in an accounting tech space. At some point, it got to the point where he was having the pain himself.
Mm.
Oh, I forgot this. I got to deal with that. And maybe I have a trust or a holdco or something. And he was having the same pain. And then he started asking his friends, do you have this pain?
Mm.
And he's in that community. Yeah, everybody had the pain. Then he started to ask the partners at the firms and the leaders of the partners of the firms. And they're like, yeah, this is a problem. And then he came to me and he's like, you are way underfunded and way understaffed, and you are not right sizing your opportunity. You're thinking like really small. You're saying, hey, how do I solve it for me and my friends? You should be thinking this is a global problem.
Mm.
We have a global solution. I want to come full time. I want to invest. I want to take over as CEO. And I want to make sure we raise the capital so we can right size the effort and the investment on our side so we can actually tackle this problem. Because it was one of the biggest, it's a massive problem. Like just in North America alone, it's over $80 billion of problems, but it's a global problem. So that's when we got to the, okay,
So when he approached that big thinking idea to you, what was your mindset like?
I think I broke out into like sweat. Yeah. Yeah. I think I had like a mild panic attack, because I'm envisioning like I'm making sure payments are still being made. I'm double checking every night. I can't do that on a global scale. Like that's wild. Like my brain was here, and then he was forcing my the capacity in my thinking, saying, why are you thinking small? You need to think big because it's a big problem, and a big problem needs capital. A big problem needs a massive team, and capacity. So he talks about building capacity under the wings so that the plane can fly.
Mm.
You need a team. You need support. You need the right. You need the right people, the talent. So you have to attract talent.
And this was how long? So you started, let's say, 4 years ago.
Yep.
And now, when did this conversation start?
That conversation was ongoing
Right.
since the beginning, but we really,
When you started having the sweats.
Yeah, it's probably 2023 is when it went from a small tool we could use internally to let's actually start a business here, right? Because before that, I wouldn't consider it really a business. It was just more an idea that we ran internally with some friends. But once we hit end of 2023, it was like, no, this is a proper business. We need to raise capital and we need to be serious.
So now what? So 2 years, where you guys are now, you talk globally. Have you started seeing trends globally and,
Yeah,
Started in Canada, obviously.
started in Canada because that's where we got first regulatory, but really quickly in 23, we started working on US regulatory because the opportunity there is you think it's bad here, like the process there is very tough because
Now,
every state has its own payment plan.
you have this big idea. I mean, going into the states, there's 50 states.
Mhm.
Every state is different.
Mhm.
Like, where do you even think about starting? Like, do you just pick a state?
You have to be very smart and diligent about your process and approach. Obviously, you need to do your research. There's regulatory.
Right.
The US is different because there's in Canada there's one regulatory body that oversees it. I mean, I can get into
Mm,
the minutia of it, but in the US basically you need to be regulated in every state.
mm,
So you need 50 applications. It costs a lot of money.
mm.
So you have to be very targeted and very specific. So we started looking at the customers. We were talking to firms. We were getting IRS approval, federal regulatory. So we started with the key things. And then as key customers emerged, that's where we targeted our energy on those states.
So, like the same approach you did with your wife, McIntyre, and partners, was that the same iterative approach you did in the States?
Correct.
Right.
Yeah.
So, start locally, small partners, build it.
Yeah, the only difference is rather than small in the States, it was one of the largest firms and
Oh, okay.
probably as a top 25 firm in the States. They were the ones who were very keen right up front. So we were more targeted on their customer base and where they needed to make payments. And we now had an enterprise partner that understood the pain, loved our solution.
Now, was that
Yeah.
the strategic thinking of going bigger
Yes.
versus right?
Yeah.
So now you were or s- potentially thinking individual firms
Yeah.
where your partner was like, why don't we get the enterprise firm?
Correct.
Right.
Well, he said, "Great, we're going to spend all this energy and we're going to solve the problem for X state for a small firm with four partners, and the most revenue we'll get out of that is 15, 20,000. That's not enough. Like it's not enough like we might as well target an enterprise firm."
Because the level of energy now
Yeah.
between an enterprise and a small is probably it's like a 2x to like a 100x
Yes.
return.
Easily.
Right.
Yeah. And obviously the demands are higher and you have to show up and you have to have a strong team.
So you nail this enterprise level accounting firm.
Yep.
Now what?
Uh, we had done a friends and family raise.
Hmm.
We had built trust with that firm. It didn't happen overnight. It was probably a 9-month conversation to get to this point.
Now, not your structure, but if someone is looking to expand to the States and be Canadian, like, do you recommend, like, is there a certain, it might depend on the business, but is there a philosophy around what's the best way to scale a tech company in Canada? Like, do you operate in each state? Like, do you incorporate in each state? Do you incorporate
Oh
in Canada?
no, we have an entity in the U.S. And then your state filings are based on like your activity in each state
Okay, so
and who you're selling to, and there's a bunch of rules. Also depends on the type of services and things you're selling and how you're
and
selling it.
you guys at McIntyre do this, or do you have to like get accounts? Because that's another thing I hear all the time. It's like, okay, I want to go to the States. I don't even know what structure I'm at. Like,
Yeah.
there's a lot of things that even have those conversations. Were you comfortable in moving to the States from a back end perspective, or did you look at resources in the States to help you think globally or think bigger?
Yeah, anytime you're going to move into a new jurisdiction that you don't know, you need to find your team there. So you need a lawyer and you need an accounting firm in the United States or one in Canada that does cross border. You can't just set up shop,
Right.
because even though the world is shrinking in terms of everyone working with everybody, um, compliance, regulatory, and all that. Call it the pipes, the nuts and bolts of a business need to be put in place correctly, just to make sure you're handling that correctly.
Right.
So I mean, yeah, I'm lucky that I have clients that have moved to the States and work in the States, so I know people there already
Mm.
that we can plug into, so we can still and have comfort there. But we have a U.S. accounting firm, we have a U.S. law firm as well
Right.
that works with on that side,
Specialty.
plus a Canadian one,
Right.
and then there's transfer pricing between us. So
Right.
it gets just moving there seems appealing, but it's very complicated and
Right.
has to make sense.
Right. Yeah, I mean, I have it at a small scale with my wife being American and just doing the U.S. tax return and just finding someone on this side of the border to understand the cross-border stuff is challenging. I
Yeah.
couldn't imagine incorporating and thinking globally. You got to
Yeah.
really think of all these things as well.
Yeah. So that just comes down to building like attracting the right talent,
Yeah.
having the amount of capital you need to do it right, um, and and then just being really focused on what you need.
Now, without, um, I know the money thing is confidential and everything, but from a mindset perspective, did you think it was as much as you needed to like, or did you like 10x that,
Yeah. Yeah,
like
it was interesting.
expectation wise?
Yeah, like when we initially went out to talk to raise money, we were aware of the problem and the cost of the solution. And when we talked to Canadian, uh, it's not really just Canadian, but we talked to some venture funds. They were like, "Oh, that's more money than you need. You probably only need this amount of money." And then you talk to other ones that have had success globally on very large things in the fintech space, and they're like, "Your number is way too small. You need to go here." So we were getting people
Mhm.
saying, I'll make a number up. Let's say
Yeah.
it's just 5 million. 5 million is too much. You only need two. And then we've got another one saying 5 million. That's not even nearly enough. You need 50. And we were just sitting in the middle saying, how can there be two different
Was
directions?
that another sweat moment?
Oh yeah, no, like there's so much opportunity to figure out, and it's stressful. Yeah,
Right.
yeah, because that's a whole other area of the business. It's not even just doing the work, doing the business. There's the raising capital for the business. It's a whole job, and
Yeah.
Salon is excellent at that.
Right.
Yeah.
Yeah, and I think that's so important to know because I was at SaaS, Software as a Service North, which was held in Ottawa about a month ago. And the big thing that was talked about was keeping companies in Canada.
Hmm.
But then the second part to that was okay, if you get traction, you need money. And a lot of the money is in the States, and venture capital or PE companies are in the States where they want you to go to the States because it's a bigger market. So it kind of defeats the whole purpose
Yeah.
of like, thinking about is it 2 million versus 10 million and needing that 10 million to really have a big idea, right? So I think Canada needs to do a better job with that fundraising, those venture capital without me knowing too much about it. But it seems from the conference that's a huge hurdle to keep companies in Canada, and expand just Canadian wide.
Yeah, I think it's a combination of things. In Canada, there's amazing entrepreneurs, amazing universities, amazing ideas, amazing communities like Software as a Service North or Tech Two. Like there's a ton of these communities across Canada, and in Ottawa as well, where we are. We're probably doing awesome
Yeah.
relative to a lot of places. So the community is big. The ideas are amazing. The talent is strong. Um, the challenge is sometimes, at least what we were finding is sometimes we the challenge is sometimes expanding your thinking to think globally, um raising capital for the opportunity, but yeah, to stay in Canada, it's also just the businesses that you want to sell to. Th- when you're a startup, your proof of concept or your MVP is not very good,
Mm,
and more businesses that I felt when we were getting started on our journey wanted a more fully baked product
mm,
and didn't want to take a chance on you until you were fully baked and you could solve every one of their needs. There are some firms or businesses that are innovative that want to take advantage and use the tool and are okay with that, and they want to be part of the journey, and there's a lot of them floating around. But the question is there enough of them to make it worth your while to continue on that journey? And because at the end of the day, to raise capital, you need that opportunity.
yeah.
So that's where the challenge is if we have more businesses willing to take a chance on startups in Canada,
Yeah.
and be part of the journey. It's rewarding to do that because you're helping and you're continuing to grow the economy, I think that's going to create more of those kind of tech savvy businesses, innovative businesses. That's going to create more of a demand. And then the VCs and the investors will be more likely to give money and you're more likely to stay.
And culturally, I do feel like in the States, they're ingrained in entrepreneurship and taking risk. Have you noticed the similarities around that?
It's just, yeah, in Canada, we're very much like a crawl, walk, run approach, which is what our concept was for our business,
Yeah.
right? Crawl, walk, run. In the US, it's like crawl, run, sprint.
Right.
So then it's easier to get to scale.
Hmm.
It seems to be. Yeah. Yeah.
That's a good analogy around it. So now, fast forward 2 years, where you guys are now, like what's going on?
We've closed our seed round. Um, we've we've got a pipeline that's bigger than we can service. We've got an amazing team of almost 30 people.
Wow.
Um, we've got brilliant software developers in Canada and engineers. We've got a great team of like sales and customer support and success. You've got all this support under the wings
Nice.
as the growth, and then we have a lot of work in the pipeline um, that will allow us to kind of realize the first phase of that opportunity.
Love it. Wow, that's amazing. And what's the future look like?
It's funny because I look at it now and it's only been 2 years and we've come so far.
Yeah.
Every year, I maybe sweat less, but
Or more.
or more because it's
You're talking big numbers, yeah.
I talk like I look at a mountain, right? And sometimes if you're at the bottom of the mountain, you look up and it's like, wow, look how far you've come. But when I'm standing where I am, my vantage point is I see like I know what our vision is and our goal, and I feel like we've barely started.
What's your vision?
We want to be a global tax payment solution.
Hmm.
It's a problem everywhere,
Right.
and there's no solution, and the problem's getting worse. You talked earlier about what's happened in the landscape in the last 2 years. Well, everybody's not accepting checks anymore, right? No paper checks. The systems, the portals are getting more disaggregated. It's getting more complicated, even though it should be getting simpler. So the problem's growing, and we are a cross-border solution to that problem.
Amazing.
Yeah.
Well, we also anything I missed before we get into the lightning round? We talked about McIntyre, we talked about your family, where you're from.
Yeah.
We talked about your new venture. Anything that you want the audience to know or I missed asking?
No, I think you covered most of it. Yeah.
It's
Yeah.
funny because when you first said as accountants, you asked the question,
Yes.
and I do feel way more comfortable doing podcasts because I probably, when I was running my accounting company, just kept on asking questions.
Right. Right.
And that just, like, I don't think I've been on that seat too much
Yeah.
where I'm answering the questions and I do feel a lot more comfortable asking the questions. So that definitely resonated with me. But you killed it and you're doing awesome.
Oh, thanks. Well, I think the word auditor comes from like auditory or to
Oh,
listen.
yeah. Right.
As my dad always used to say, our job is to listen as accountants. Yeah.
So going back, we do a lightning round.
Okay.
So I'm going to ask you a few questions.
Sure.
If you could change, and this is all just hypothetical and whatever, but if you could change one rule in the tax system for small businesses, what would it be?
I think it'd be awesome if we could simplify the tax code. I think it's really complicated. It's hard to navigate. So simplifying the tax code, fewer credits, and more incentives to invest in growth.
One number every small business owner should look at weekly.
Cash flow.
Biggest red flag that tells you a business will have CRA trouble.
Not reconciling your HST with your revenues, payroll, probably payroll. Yeah. Payroll remittances.
What do you wish every client would ask you more often?
Um, that's pretty slow for a lightning round. Um, maybe I'll come back to that one.
Okay. What do you wish every client would stop asking you?
How do I pay my tax?
There you go.
Yeah,
That's a good plug.
yeah.
Spreadsheet, accounting software, or shoebox receipts. What do you actually prefer a client bring you?
I like accounting software if done correctly.
Right.
Yeah.
If a client, like, if a client brought you, like,
Spreadsheet.
yeah,
Yeah. Yeah. Yeah.
because it's probably more work if they touched an accounting file that, yeah,
There's a lot of challenges
yeah,
because a lot of people rely on the system to work. There's the bank feed that isn't complete because there's breaks in the feed. You're missing transactions. At least with a spreadsheet, I can see where you've extracted the information. I can know what's missing.
yeah.
Yeah.
Book or podcast you recommend to every entrepreneur?
8 figures. Lost a job to 8
Yeah,
figures.
there you go. That's a
Yeah.
good plug. Thanks.
All In is a nice one.
Mm.
From the older days, there's some really good information there.
Hire first or sell first when you're growing?
So
What do you optimize for more right now, speed or perfection?
accounting firm, perfection,
Mm.
startup, speed.
One word your clients would use to describe you.
Reliable, responsive.
What's the first thing in the morning you do when you open your laptop?
I shouldn't be, but I check my emails.
Last question is, if you could put a sticky note on your first laptop before you ever started, what would it say?
Email less. Yeah. I think there's a lot of focus on emailing and being responsive, but it does distract you from the work. And the more emails you send, the more you receive. And it's like a positive feedback loop.
Right.
The less I could, like, the more quality of my email in as little words as possible, um, or just pick up the phone. Yeah.
And where would people find you if they're looking for you?
Easily on LinkedIn.
LinkedIn's the best one. And that's for both your tech company and the accounting firm?
Yeah, I monitor that one just for people sending messages, or those that know me could find me, and I respond to my emails pretty quickly.
And are you accepting clients on McIntyre?
The firm is accepting clients.
Okay.
Yeah.
Well, Larry, thank you for coming on and participating. I really, really appreciate it. Your knowledge and experience in the accounting space, I mean, not only just the accounting space, the tax space, the investment space, like, I do feel when you're looking for an advisor, you're a person that I rely on and a person that a lot of people should rely on. I know it's hard to reach the partner when you're starting a business. But I do want to give a plug to your accounting firm, because when you start out and you don't know what you don't know and you can pay an advisor, it could save you so much headache, money, and everything in the future if you set it up properly. And I do believe McIntyre does it properly and really care about their clients. And you know, switching it now to the tech company, I love the fact for you that you're now going after a tech, you know, doing it the right way. You did it slow. Now you're bringing in a partner that's thinking how he's thought in his previous business to take it to the next level. And you're using your expertise to get it there, potentially in the back end and the front end, or however you guys work that out. But seeing a success story in Canada, and especially in Ottawa, and knowing you and knowing that there will be more sweats and there will be probably tears and everything, but really, it's admirable and very inspirational to a lot of business owners that you probably never thought 15 years ago that you'd be in this situation where you're building a tech company globally, right? So you did it small, you did it diligently, you did it probably very risk adverse, just naturally. And now it's it's in 50 states and it's across North America. And I can't wait till I interview you next year.
Right.
And it's, globally. So keep on doing what you're doing, keep on sharing. I think it's, if one entrepreneur takes this episode and runs with it or asks you specific questions, I think we're doing our job. So
Yeah, that would be great. I mean, I love when people ask me questions and want advice or even some inspiration. It's the one thing to note is that these things don't start overnight. You don't go from nothing to having this. You build a really strong team. You quietly build and toil away in your basement or sweat alone at night over spreadsheets for years before you get to the point where you can actually get out there and grow it. So if you have an idea, even if people don't think it's a good one, but you believe in the idea and the problem, just ignore them, focus on it, keep getting better and improve it and stick with it. Yeah.
love it. Thanks, Larry.
Thanks.
Share this with a friend so that they could be a part of this journey too. Keep watching for more.